Good morning, everybody. Hey, welcome to Wednesday, February 5th, Hump Day. We're halfway through the week. I hope your week is going well. I want to thank you again for joining us. Hey, I wonder, are you in the danger zone? The danger zone is 5 years, 10 years out from retirement. Are you there or 10 years on the other side of retirement? There's a 20-year gap there that you need to make sure that you have things under control. You need to know how much risk you have in your current portfolio. And the way to do that is our financial x-ray review. To schedule your no obligation financial x-ray review, give us a call at 863-382-0037. That's 863-382-0037. Hey, Dave will be with us in just a moment.
You happy? Well, the markets were yesterday. We know that. Time to check in on money and see what's happening on Wall Street. Big up day yesterday. Must not have been any heavy news on our side of the pond for the virus out of China, right? Let's go downtown, see what's going on to the offices of Statler Financial Services. Phillip Statler is on the line. Must have been the coronavirus yesterday, right, Phillip?
You know, I'm telling you, that's something really set the markets on fire. But I found it interesting because I was cruising, because obviously the coronavirus is still one of the main headlines. And the WHO, which is the World Health Organization, said there's no cure in sight. But then we're getting individual pharmaceutical companies saying we're getting close. So I don't know who you believe.
Well, the pharmaceutical companies are looking to pump up their stock price. The World Health Organization wants to make everybody careful. I'm tempted to believe the truth is probably somewhere between the two. What do you think?
Probably so. Probably so.
Bottom line is I don't believe anybody. Yeah, it was a relatively quiet day. One thing did come out. The World Health Organization pointedly declined to call it a pandemic yet. They are calling it an epidemic, but it has not gone pandemic yet. And that, by and large, if you can call any bad news good news, it's not as bad as it could be. So that lent to an air of optimism anyway. Setting the table, the Dow was up. We were giggling about being a big day. It was. Dow was up by almost 408 points yesterday. NASDAQ up over 2 full percent. Up 194.5, and the Standard & Poor's was up 1.5% over 48. By any account, it was a good day. And we start out the morning with macro news and come up with good news there, too. The ADP report for the month as we hit unemployment news week. 291,000 new private sector jobs. Phillip, the world's on fire all of a sudden.
It was definitely a good number coming out. It was way better than expected. I mean, ADP expected 150,000 new jobs. This is the best, best month we've seen since May of 2015 when it comes to the ADP number. So, and it wasn't just one industry. It was really across the board. All the different industries saw job increases, including manufacturing, and so a lot of the credit goes to a mild winter up north, though, because they were able to add substantial amount of construction jobs.
I was going to say, drilling down, this is one of those rare times you can't even find any bad news in the good news. Everybody, pretty much all the sectors gained, didn't it?
They did. I haven't seen any job losses out of that. And when manufacturing gets 10,000 new jobs, that's got to be good, the biggest since February of 2019.
Take that happily. The other bit of macro news we got out this morning was imports and exports. Nothing quite like a little peace in the valley on the trade front to make things go back to what we kind of expect in our economy. Imports grew by 2.7% last month. Exports grew as well, but by only 0.8%. We got some conflicting figures as to what it did for our trade deficit, but we're buying more than we're selling, which is kind of normal and not necessarily great for our economy, right?
Well, that's true. So those are some import numbers were up. We felt like the trade deal would have continued to help us, but it kind of got finalized that first phase in January. So that could be some of the issues there. Hey, on another note, we've got weekly mortgage refinance claims up 15% as interest rates hit nearly a 4-year low when it comes to a 30-year fixed mortgage.
Yeah, well, mortgage rates. I was wondering when we were going to start seeing a heavy increase in refis, because a whole bunch of us that refinanced a few years ago and we thought they were at their lowest are now saying, whoa, might be able to do better. Hey, there were a couple of reports that came out yesterday after we finished that had an import on today as well, amplified yesterday. It might give us the launching pad for today, right?
Well, that's right. We had, before we left yesterday, we talked about factory orders and vehicle sales would come in after you and I spoke, and they did. Vehicle sales, total vehicle sales came in as expected at 16.8, and then factory orders were way better than expected. They were expected to come in at 1.0 increase, and they came in at 1.8. So that was a pretty substantial beat when it comes to factory orders, which is a good sign, because that means the factories are prepping up to get ready to place those orders and to manufacture them, and that means there's more goods coming out to be sold.
That's kind of the wholesale equivalent of the consumer confidence index, right?
Yeah, exactly. Yep. Yeah, that's kind of
sort of
front loading.
Absolutely. As we talk about manufacturing, and we were talking about a growth in manufacturing jobs, kind of leads us into the company reports that kind of lead our reports this morning. And that was a tale of two companies in the automotive industry. General Motors beat the street. Hoorah, right?
Yeah, they did. They beat the street, and they had a decent year. Now, they did get hurt. Let's don't forget. They had that major strike, and that did hurt them substantially. As a matter of fact, it took away most of the profit and made it down to basically next to nothing. So, but they were able to weather it okay, come out the other side. And their stock price, when I looked at it, I don't have it up right now, was up about 1%, I think. So yeah. And then go ahead.
I was going to say, just coming out of an extended strike without a loss is good news.
It absolutely is. And the other side of that coin is Ford.
Yeah.
Ford, not so good in the news today. They're down 7%, at least pre-market they were. They reported a loss of $1.7 billion for the fourth quarter. And on top of that, they issued disappointing guidance for 2020. So that's not good for Ford. Actually, they're down almost 8% right now. Still above their 52-week low though, Dave. But so they're and so on top of that, then you've got everybody cutting their guidance, right? Cutting the expectations. So that's piling on to Ford, lowering their price even more.
I was telling you before we went on the air, I didn't see the specifics, but I knew that they were getting downgraded right and left. It just still remains culture shock to me. One of the great old brands in this company's manufacturing sector selling for $8.44 a share. I mean, they're not like the brick and mortar retailers where we're talking about going out of business or anything, but still, they're hitting hard times for the last few quarters, aren't they?
They are, but I still go back, Dave, to the the recession days and the bear market days, when I remember Ford trading somewhere around $1.50, $1.60 a share.
Yeah, point. Everything's relative in the world, isn't it?
That's right. That's right. I mean, if you'd have bought it then, think of where you'd be today.
True enough. Other reports, as we kind of tie the ribbons, we're getting toward the tail end of earnings season, I'd wager. You see anything else interesting out there this morning?
Well, we had Disney come out, right? Disney, they beat and did well on both revenue and just across the markets. They did well. Now, one thing they're getting beat up about is they didn't disclose or update their guidance on their streaming service. I think a lot of analysts were expecting to see some outlooks as to what that might look like, and they didn't get it, so they weren't real happy about that. And so they're still trading up today. Don't get me wrong; they're up about 0.5% this morning.
They just don't show up on the big winner list because they disappointed some of the green eye shades, huh?
Exactly. Another one, the social media company Snap, and they came out and they're getting beat up pretty bad today. They had a disappointing quarterly revenue number. New ads, I mean, they came in, they missed by about $2 million in revenue. And one of their key indicators that they look at is the company's average revenue per user. And that missed analyst expectations substantially too. And so they're trading down almost 7% this morning before we get started.
Kind of interesting. As we watch the internet platform as a revenue business model mature, it's starting to look more and more like the rest of the world. We talk about the big three or the big four automakers. And the internet revenue model is starting to get to the big three and a whole bunch of hope fors, wannabes as well, some of which may succeed, may get big. But it's really starting to become a stratified business, very much like we're used to seeing in every other business model, isn't it?
Well, that's true. I mean, there becomes these key indicators that people look at, and so they start measuring that business by those key performance indicators and to determine whether they're on track or off track moving forward.
Absolutely. It's an intriguing thing to watch a whole new industry grow and mature, even as we talk about it every morning. Got one more before we got to get going today.
So let's talk about one that that we have been in the news for bad things over the last couple of years. Chipotle,
Yeah.
they came out and they beat by about 10 cents a share, and revenue came in as better than expected. So same store growth was better than expected. So they had some good things happening there for a change. They're up 1.7% this morning. They'll actually open at a new 52-week high.
I was going to say, it's been about a year since they've had any of those bad news stories hit, so it's good to see them recovering. Setting the table this morning, once again, big day up on Wall Street yesterday. The Dow was the dog of the three major indexes, and it was up almost by 1.5%. NASDAQ up by over 2%. The Standard & Poor's over 1.5%. Can we keep that momentum going this morning, Phillip? 45 minutes early, where are we going?
Hey, we still have a third day of green ink, Dave, and substantial green ink at that. The Dow is right now up 244 points. The NASDAQ's up 106, and the S&P 500 is up almost 29 points. So everything's looking rosy in that ballpark. We go over to the commodity side, and we've got ups there too. The gold is up just a tad bit over 0.1%. Silver's up 0.33%, and then crude oil is it's up 2.5%, Dave, but it's substantially lower than where it was yesterday. You got to like this number now, $50.86 a barrel.
I'll take that happily. Overseas markets, everything's pretty much green as well. Even the Asian rim markets in mainland China were up this morning. Europe up by about 0.5% or better on their major indexes halfway through their day as well. Phillip, somebody need advice when things are on the upside. It's tempting to get way too optimistic. Then we get nervous when things go down. Stability counts. How do I find you to get that stability in my retirement accounts?
You know, Dave, what's important is are folks in that danger zone. And the danger zone is 10 years before and 10 years after retirement. If you're there, it's vitally important that you make sure you don't have too much risk in your current portfolio. To find out, schedule your financial x-ray with us here at Statler Financial, 863-382-0037. And then catch us on our website at statlerfinancial.com, and then join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
All righty, and back here again tomorrow morning with an update as to what's going on up to the minute. Phillip, thank you much. We'll catch you tomorrow.
All right, you have a great one.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. I appreciate it. Hey, if you like what we're doing, please like our page at Facebook, Statler Financial Services, and then like our page, share it with other friends and family. Get our name out there. We really appreciate it. Have a great day. I look forward to speaking to you again tomorrow.